President Trump announces that he plans to unpause Liberation Day-style tariffs, including 25% taxes on Japan and South Korea, two U.S. allies that make up nearly a tenth of total U.S. imports. What is the likely economic damage, and will the president follow through this time to prove that Trump doesn't always chicken out?
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome, I'm Kyle Peterson with the Wall Street Journal. We are joined today by my colleagues, Mary Anastasia O'Grady and Alicia Finley. President Trump's 90-day pause of his massive Liberation Day tariffs is now expiring, and on Monday, the White House began firing off a series of letters to foreign leaders explaining how he plans to proceed. Here's a piece of the letter he sent to the Prime Minister of Japan. It says, "We have had years to discuss our trading relationship with Japan and have concluded that we must move away from these long-term and very persistent trade deficits engendered by Japan's tariff and non-tariff policies and trade barriers." He goes on to say that there will be a 25% tariff on any and all Japanese products sent into the United States beginning on August 1st. Here is President Trump addressing these tariffs at a dinner on Monday night.
And all I say to the other countries is, some of them wanted to make a deal and want to be fair. Others perhaps got a little bit spoiled. They were a little bit spoiled because for 30, 40 years, 50 years, they were taking advantage of the country. So we're going to, I would say, final, but if they call with a different offer and if I like it, we'll do it. I would say firm. No, I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now, yeah.
Mary, what do you make of that? After the pause on the Liberation Day tariffs, there was a lot of chatter about the taco trade, investors not thinking that President Trump would actually pull the trigger on these. Last night, he was saying he's not 100% firm. Here he is today on Truth Social. Tariffs will start being paid on August 1st, 2025. There has been no change to this date, and there will be no change. No extensions will be granted, he went on to say.
Well, Kyle, I think that the president is very much impacted by the stock market. And you'll recall that in April, when he said that all these countries were going to be served with reciprocal tariffs, the market took a big dive. And it has recovered. And I think what he's doing right now is he's looking for the ground where he can impose tariffs, but not create a spasm in the stock market. And that's why you have 10% tariffs on a whole bunch of countries, countries that don't even have trade deficits with us. And then you have lighter tariffs on countries like China. I think he's still trying to negotiate something with Japan and South Korea. So he's hitting them with something that he thinks will hurt. But a lot is going to depend on what happens, how the market reacts and how the economy reacts. Because, after his big, beautiful bill, he and Scott Bessent, the Treasury Secretary, have been predicting that the economy is going to do very well. And if these tariffs which will be a drag on the economy, hurt the economy enough that you start seeing maybe not a recession, but what economists call a growth recession, which is lower growth than what is our potential, I think he'll respond. He wants tariffs. He doesn't like imports. He likes the money he collects from tariffs, but he's also impacted when he sees negative results from his plan to, be tariff man all over the world.
These rates that he's announcing, Alicia, are pretty high, up to 40% tariffs on, for example, Myanmar. And they seem to reflect his thinking on Liberation Day, that this is about trade deficits. That's what he keeps talking about. And economists say that there's no reason to worry about the overall trade deficit, but even less to worry about bilateral trade deficits, a trade deficit with a single country. If we buy a lot of stuff from Japan and we sell less stuff to Japan than we buy from Japan, but there are other countries where it's reversed. We sell more stuff to the United Kingdom than we buy from the United Kingdom. The theory is that it all comes out in the wash, basically. And 25% of tariffs on Japan and South Korea, huge U.S. trading partners that we get a lot of goods from. It's hard for me to think that wouldn't have any effect on the economic growth and the broader economy, as Mary's describing.
I think that's right. To your point on the trade deficit, President Trump has shown preoccupation with it for decades, and he has also especially shown a preoccupation with Japan and its trade practices, and is going back to the 1980s when he thought that the Japanese automakers were taking over the U.S. industry and weren't playing fair. He also, back in the 1980s, there was concern that the Japanese semiconductors also were unfairly benefiting from domestic subsidies. So this has been a recurring theme, not just throughout Trump's political career, but for much of his life as a public figure. Now, I think he probably knows we're not going to eliminate the trade deficit entirely with these countries. To him, the trade deficit reflects some kind of inequity, unfairness in trade practices, that they aren't playing fair with us, and that's revealed by the trade deficit. And so I think one of his goals is to reduce some, maybe I'm giving him a little too much credit, but is to reduce some their trade barriers to U.S. goods. For instance, Japan has been very strict and it hasn't allowed in certain U.S. agricultural products, rice in particular. South Korea, I think Trump, again, he has been preoccupied with the auto imports, which have increased tremendously since the Obama signed the South Korea free trade agreement. And that has eroded some of the U.S. competitiveness. Stellantis in particular has been harmed by, or I wouldn't say it's harmed, but it has lost market share as a result. And so he thinks that the imports are hurting U.S. companies. The reality is that there's a lot of U.S. investment and a lot of manufacturers that depend on imports from the South Korea, Japan, as well as some of the other countries you listed. South Korea is a powerhouse in addition to Taiwan in semiconductor and chip manufacturing. Japan actually also makes a lot of memory chips. Japan makes a lot of generic drugs. Takeda is one of the biggest world's biggest generic drug manufacturers. And in terms of industrial equipment, there's a lot of components that go into washing machines, gas turbines and such, that are actually made in these countries and then are shipped to the U.S. and then assembled and made into final goods that for U.S. consumers or businesses. So this will raise business costs and it will ultimately raise consumer costs. How the Japan's auto and South Korea's auto industry handle this, it's going to be interesting because the 25% tariffs are layered on top of the other sectoral tariffs, including the 25% on autos. That means it's essentially a 50% tax on imports of Hondas, Hyundais, Toyotas, Kias, and I'm not sure these manufacturers are going to be willing to absorb that cost right now. So they may just stop shipments for the time being and see how things play out, and hope maybe the countries strike a deal that will provide some kind of relief, both from the auto tariffs and these new 25% tariffs. I know I've heard that there's something in the works with Europe and the U.S. that would provide the European automakers relief from the 25% auto tariffs that part of the negotiations in their broader deal. So maybe that could happen. But in the meantime, what you could see also as a result is a shortage of cars on some dealer lots if they don't continue those exports.
The point about the economic uncertainty, Mary, I think is a huge one. And autos are a big a big issue if you're talking about trade with Japan and South Korea, but they are far from the only issue. So the imports, U.S. imports, were about $148 billion from Japan last year, about $132 billion from South Korea. And that includes a lot of stuff, about $10 billion in industrial machines from Japan, $7.5 billion in pharmaceutical preparations, $8.5 billion in semiconductors from South Korea, $3.2 billion in household appliances. And so, Mary, if there are 25% tariffs that are added, again, as Alicia says, on top of any sectoral tariffs, I mean, there are going to be widespread effects of that, I think. If there's less competition in the markets for household appliances, for example, that's protection for U.S. manufacturers of washing machines and dishwashers and so forth. But it's not good for the U.S. consumer, the U.S. homeowner, if there's less competition, price competition, and also quality feature competition in that market. And then there are maybe factories, U.S. factories, manufacturers that rely on highly specialized industrial equipment that they don't have real alternatives. You can't go buy that stuff on an open market if your factory is set up to use machines from a certain manufacturer. And so I think it's hard to figure out. One of the difficulties of trying to be a central planner is trying to figure out all of the effects of something like this that are going to cascade through the economy in ways that are invisible to policymakers and consumers, but add costs. And by the way, I know Trump says these are going to take effect on August 1st, but we've already had months of difficulty planning and making investment decisions for businesses. Now they have to guess what's going to happen on August 1st and afterward.
Yeah, I think you hit the nail on the head when you said central planning, because there's this famous essay by Leonard Read from the Foundation for Economic Education many years ago called iPencil, and it talks about all the different components that go into making a simple pencil: the wood, the eraser, the graphite, and show the complexity of it, that the market solves the problem of bringing all these producers and assembly components together to create the pencil. And that's not something that's designed from Washington. And then you can imagine, in the kinds of machinery that you're talking about, the complexity that's added to that, from everything from the little screws and different components that go into the machine. Many of those are imported from different places all around the world. I mean, one of the things that I find very frustrating listening to Donald Trump is that he seems to think that if you put up these barriers, immediately you are going to have the same product produced inside the United States. So you get a twofer. You collect the duties if they try to send things, and you create jobs with all this new manufacturing. And of course, that's a complete fallacy. I mean, we can take that argument apart very easily. He says he's going to, he's already got many plants lined up to start making things. But generally speaking, manufacturing plants take years to actually plan out and then build and then become productive. So those are problems that are going to hit the U.S. economy. That's why I think he's going to try to find a level of tariffs that will allow him to collect income, because he, when he came to see us in October before the election, he talked on and on about the billions and billions and billions of beautiful dollars that he was going to collect from tariffs. And Scott Bessent has talked about how, tariff income will be a big part of offsetting things that happened in the big, beautiful bill, costs and being able to rein in the budget by using this tariff income. So he wants to find that sweet spot between enough tariff income that he can say, look how much I'm collecting, and what is not too much that he's going to shut down the U.S. economy. And you can see that Alicia talked about trade deficits, but of course, the mirror image of a trade deficit is a capital account surplus. And, he says he's attracting all this capital. That's going to push the current account deficit up. And he's even putting tariffs on countries like Guatemala, where we have a trade surplus, and he wants 10% from banana imports and coffee imports. And so for me, that kind of exposes the intellectual dishonesty about that this is supposedly about trade deficits and somehow manufacturing going abroad. I think this is about collecting money from anybody he can wring it out of. And to the extent he can do that using reciprocal, using just a 10%. A lot of people who work for him also are people who have believed that we should have a consumption tax all along. And they have a problem with inventing a consumption tax because we already have an income tax. And a lot of people, including me, will say, if you want a consumption tax, repeal the income tax amendment. And that's the 16th Amendment. And he's not going to be able to do that. So he's trying to put a consumption tax in, calling it a way to protect U.S. manufacturing. But it's really just a new tax on U.S. consumption of things that come from abroad. And I think that's really the bigger motivation here, as opposed to some kind of change in the global trading regime.
On the point about the money that the White House expects to raise, let's listen to Treasury Secretary Scott Bessent at the cabinet meeting today.
Go ahead, please.
Yes, sir. We will have taken in about $100 billion in tariff income thus far this year, and that's with the tariff, the major tariff not having started till the second quarter. So we could expect that could be well over $300 billion by the end of the year. We don't agree with CBO scoring, but for those who do, the CBO scored tariff income over the next 10 years at $2.8 trillion, which we think is probably low.
Alicia, that's interesting because President Trump just over the weekend signed the Republican reconciliation bill. A big part of that was avoiding a $4.5 trillion tax increase over the next decade from the expiration of the 2017 tax reforms. And I think that was important for the economy, for providing economic certainty to businesses. And yet there, by the Treasury Secretary's own inkling, is the $3 trillion tax increase from tariffs that President Trump is imposing. Maybe Mary's right. I mean, Trump does talk often about this money that he expects to be flowing in. He also, as I was making the argument earlier, talks about the trade deficits. I think that's part of his motivation. And you're right that he does also sometimes talk about moving to more free trade, getting trading partners to lower their barriers on U.S. exports. On the other hand, if you look at these letters that he is now sending out to Japan and South Korea and many other countries, they are almost form letters, and they gesture at this point about opening markets. So here is a line near the end. It says, if you wish to open your heretofore closed trading markets to the United States and eliminate your tariff and non-tariff policies and trade barriers, we will perhaps consider an adjustment to this letter. And so nothing specific that is cited there. That does not look to me like it is a serious effort at a trade negotiation. If this were aimed at getting Japan to be more accepting of U.S. agricultural products, for example, there's an easy way to do that, which is to get into a negotiation with the Japanese trade representatives and really hash out the details of it. It is not this kind of form letter being sent to everybody saying, well, maybe we will consider lowering our new 25% tariff if you take some kind of action that we're not even going to hint at.
Well, I think so. A couple of points on this. Japan, ironically, Trump administration did make a deal with Japan, trade deal in the first term. It wasn't ratified by Congress, but it was a trade deal that was intended to expand U.S. access to the Japanese market. Now, what is he after? I think he wants, my personal opinion is he likes to play the kingmaker and likes the power that he wields, being able to threaten other countries with tariffs, and would like to extract some kind of concessions that he could tout to voters, saying, here, see, I got them to reduce this trade, or their trade barriers, and in return, we are not going to put the full, whatever% tariff on that we were planning to. I mean, I think you can see that a little bit in his Vietnam deal. which allowed or reduced Vietnam's tariff rate for U.S. goods basically to zero, while putting a 20% rate on Vietnam, which was lower than it otherwise would have been, more than half. But the threat still looms out there that he could ratchet that up at any time, because this being Trump, he's very whimsical, and if he doesn't like something you're doing, and it doesn't even have to do with trade, it could be some kind of other foreign policy, he could threaten tariffs, like he is against Canada, or he did with the Canadian digital service tax. And to his credit, he actually got Canada to back down on that. And so he likes having that power, and also likes being able to boast about victories to his supporters. So my personal view is he does end up backing down on the August 1st deadline for a bunch of countries. Maybe he goes through with some of them, but I think he will take some victories and say, we're going to continue to negotiate to get a better deal on other things.
Another thought here, Mary, is on the geopolitics of this. The Trans-Pacific Partnership, the whole idea behind that was to get a bunch of friendly countries together and set the terms of trade in a free trade direction in response to the bad behavior of China, who Trump also sees as a big U.S. adversary. And so I'm not sure what is to be accomplished here geopolitically by slapping 25% tariffs on friendly allies, democracies in China's backyard like South Korea and Japan. And maybe South Korea and Japan are less likely to respond to this by moving toward China. But I wonder about some of those other countries in the region who are less close U.S. allies, whether they might see this as see their interests now as cozying up to China if the U.S. is not going to be a reliable trading partner.
Again, I go back to when he visited us in October before the election. He sees tariffs as, a remedy for anything that could cross your desk. Got a problem with scalpage? Tariffs. Got a problem with drug use? Tariffs. And so I think we can, in some cases, sort of get behind the idea that he wants to use tariffs to try to bring countries into more democratic behaviors. That would be China. This week, he put, I think it was a 10% tariff on what they call the BRICS countries. So that's Brazil, Russia, India, China, South Africa, and a bunch of other countries that have joined the group. And they're basically an anti-American alliance that's trying to undermine the dollar and do other things that, are not in keeping with alliances with the U.S. So, those seem to me to be somewhat legitimate uses of trade as a way to try to bring countries closer to us. But I feel like the attacks on South Korea, Japan, even Vietnam, which is sort of slowly reforming, is counterproductive. I mean, in the case of Vietnam, I think a lot of people have been worried that there's this third country shipping. So to crack down on Vietnam is to crack down on China. But, it seems like shooting yourself in the foot to go after countries who are allies, particularly in Asia, when China's sitting there with open arms ready to take them into its orbit. And not a good idea for the U.S. I think it will create more enemies than allies.
Thank you, Mary and Alicia. Thank you all for listening. You can send your own tariff letters to pwpodcast@wsj.com. If you like the show, please hit that subscribe button, and we'll be back tomorrow with another edition of Potomac Watch.